Our market monitor tonight expects the stock market to pull back a bit, about 5%, he says, but that's a good thing. He's Phil Orlando, Chief Equity Strategist at Federated Investors. Welcome back, Phil. Good to see you.
Thanks for having me back, Tyler.
You know, I asked one of our guests last night, you've got profits growing at 2%, 3%, 4%, maybe. I don't know what the real final number will be for this quarter, but you got a stock market that's up 18.6% so far this year. Is that really sustainable?
Absolutely, and the reason for that is stocks are cheap. We started this cycle back in '09 at 11 times earnings. Right now, we're only at 14.5 times next year's earnings. We ought to be trading at 18, so this is going to continue over the next couple of years.
Okay, that's good to hear. You know what, Phil, we got lots of questions for you from viewers, so let's get right to it. We have Gary who wants to know about the outlook for Halliburton. You heard our story earlier in the program about it settling all of those BP spill issues.
And that overhang now is behind the company. That allows them to focus on underlying fundamentals, which are pretty strong. They're going to do a significant buyback program. So we like Halliburton. Here in the mid-40s, you could see the stock move up to the mid-50s over the course of the next year or so.
Well, let's move to Dave in Ohio. He wants to know whether Target is a good one to own. What do you think, Phil?
We do like Target, but the retailers are under pressure right now. And you talked about some of this at the beginning of the show. The increase in taxes, the sequester has hurt consumer spending. We do think that's going to improve in the second half of the year. If Target comes in here into the high 60s or so, I think it's attractive for a rebound in consumer spending in the second half of the year.
All right, in another sector, fertilizer supplier Potash, Lauren in North Dakota wants to know about the outlook for this company. What's your view on this, POT?
It's a great fundamental story that's under a lot of pressure right now for a number of reasons. You've got a normal growing cycle in the United States, so the prices of corn and wheat, for example, are sitting at 52-week lows. The emerging market customers this company sells to, China, Brazil, et cetera, right now are weak from an economic standpoint. You've got a strong dollar that's creating some currency headwinds. So right now the numbers are a mess. Longer term, the stock's still attractive, but near term, it's probably not where you want to be.
All right, let's move to Jim in San Jose. He says he's owned Microsoft for a couple of years now, and he's wondering whether he should stick with it. What do you think, Phil?
Well, you've got to have a lot of patience here. They just pooched the quarter within the last week or so. The stock's down about 15%. The problem is that the company is still, its core business is still the PC, or tied to the PC, and that's an area that's in decline. The areas that are hot right now are mobile, smartphones, things of that nature. So what you want to see is some sort of a major transition or reorganization, maybe even some sort of a change in senior management. We've got to get Microsoft focused on areas that are growing rather than areas that are in decline.
So, Phil, you have two stock recommendations of your own, and we want to hear about them. Gilead Sciences, tell us what's so attractive about GILD.
Biotechnology company, they are active in the hepatitis C market. What occurred just within the last 24 hours, which is very exciting, is one of the companies that they've been competing against in terms of developing this drug to come to market, they had some liver-related issues, and the FDA has held them up. That clears the way for Gilead to come to market probably by end of year, and being the only major company with a drug in this market. That could give them a 2 to 3 year head start to really develop a strong foothold. Stock here at about 60, we could very easily see that in the mid-70s looking out over the next 12 to 18 months.
And your other pick, we got about 30 seconds, Phil, is Qualcomm. And if you would conclude by letting us know whether you own any of these stocks that we've just talked about.
We actually do own both Qualcomm and Gilead. They blew the quarter out. Qualcomm did the other day. They guided higher. Unlike Microsoft, they are in the smartphone business, which is growing. And this company, we think, is positioned to continue to do very well over the next couple of years.
Phil, great to see you. Have a great weekend.
Thank you, Tyler.
Phil Orlando is Chief Equity Strategist at Federated.